Okay, hello. Welcome to the third video in the high volume node series. In this lesson, I'll show you a few methods of how you can use high volume nodes to identify swing trade entries, buying areas, stop losses, and take profit targets. But first, I have to mention, we do not use high volume nodes alone as trading signals, and they should be combined with indicators and other tools as part of a trading system. This lesson is a small part of the larger picture, and once we've combined Fibonacci tools, indicators like RSI and EMAs, and we have a much higher probability of success on our trades. Also, we must make sure to have a risk management strategy in place before entering the market, and you can always practice with dummy exchanges first and back test on TradingView yourself. Should never risk more than 1% of your trading capital per trade, and you can check out my risk management videos to see how I do it. So, high volume nodes are your roadmap for entries, exits, and risk management because they're high probability reversal and consolidation zones, as we learn in lesson 1. Remember to always look left to confirm the high volume node strength. More touches means more reliability. I've hidden some of the chart here so we can have a more live feel for it. Okay, let's jump to it. So price is coming up here. It's a bit dodgy, that square. Price is coming up here and it leaving a long lower wick here for a start, which is now found strong demand support. So we can tag that as an area of interest with our high volume node in the wick. Same as we could have done down here in this cluster, as I've shown you in the last video. And then price carries on, there's no action to take yet, and we can see it terminates and reverses in this area, which happens to be the all-time high. And you can tag that with a horizontal line and put your high volume node in as you see fit for now. Now, as price develops, we're waiting. Sadly, is what most trading and investing is, just waiting around for things to happen, patterns to emerge, areas to be hit for entries, etc. And we have our first test of the channel EQ in the support node here. And that's a good first step. Let's see what happens next. We're still waiting. No action yet. Price finds support, bounces straight back up into the resistance that we identified from the all-time high. Now, this is why we haven't entered anything yet, because price could just pop above there and take out our stop losses. Price could just carry on. We need to make sure that we're going into a consolidation phase where we can identify areas of interest that we can take action on. So we're watching. Price wicks back in here, touching the channel EQ as described. This rejection and this bearish engulfing candle would be your first signal to go short with a stop loss above this swing here, as this is now a swing failure into the high volume node. As I said, you would combine this with an RSI strategy so that when the RSI flips down, gives you some confluence that prices be rejected, and you can take action. As I said, stop losses can be put above the swing here. Some traders prefer to put the stop losses at the immediate swing with the expectation of much lower. Let's hide that a little bit. I know you've seen it, but that's all right. In this trade, where would you set your take profits? You would set your take profit into this high volume node. Now, how I like to do it, I would lower the high volume node, by the way, to cut out those candles there, just to give us a bit more accuracy on the trades. Now, how would one set a take profit? Due to the amount of volume and action, prices can wick in and out of these nodes really fast, and your orders may not get filled. Nothing more frustrating than that. Your target's been hit, but your orders don't get filled. Damn. So, what it's best to do is place your take profit just slightly above the high volume nodes here, and we can see in this case that your trade would have been successful. Let's just quickly give you an idea of what you'd be looking at. So you waited for this rejection, and your take profit would be down just above here slightly to ensure it goes through. And your risk reward ratio is 2.4. It's a pretty good trade. Okay, and close out your trade here and you wait to see what happens next. And this is not exactly how I would do it. This is just a small part of the larger picture. I'm giving you examples of how the price behaves, so you know what to look out for, where to set your stops, why price you want to set your stops there. You don't want to see price continuing upwards and leaving you significantly underwater on your shorts. You don't want your orders to be missed down here. It's a game of probability, and you have to give yourself the highest chances always. And you don't want to be sitting in trades underwater. Price continues, and that's one trade there done. What happens next? And we see the opposite pattern that we just discussed here. Big long lower wick, bullish engulfing candle. We can set another trade below the high volume node. Sorry for leaning in so close. With another target here, just below the high volume node. Resistance. Let's see if this worked out. Boom, boom, boom. It did not work out, and this time you stopped out as price swung below down here. But overall we're still up because you made 2.4% on this trade and you only lost 1% using proper risk management down here. This pattern, however, gives you another opportunity. This is the swing failure pattern. The breakdown failed. Very strong signal, bullish signal. The breakdown failed and price quickly reclaimed the range that it's trapped in. You could enter another long hit on this retest with the exact same price targets identified, again against the swing low with a 2.2% risk reward ratio on this one. Let's see what happens. Another win. Price continues up, continues to consolidate. Looks like it wants to break out higher on the 1, 2, 3 and the 4th test. However, it does not. Once again is rejected, potentially giving you another entry, short entry here on that. Oh, wrong one. Giving you another short entry on this bearish engulfing candle here. Get that stop loss above, always above or below the high volume node, because that's where the volume sits. Price is not likely to go out of it. If it does, then you could be in trouble. So keeping that stop loss above there, you have another smaller trade here to the same target area just above the high volume node, another win of 1.57%. So far you have 1 loss, 2 wins alone in this range. The wins far outweighing the losses. Continuing on in the range, and this is where the 200 EMA line is, by the way. That adds confluence to swing failure patterns. We have another swing failure pattern here, and you could take that trade. Sadly, that'd be another loss, but it doesn't really matter because you're still going to be up from the first 2 trades. Getting stopped out there for 1%. And we continue on with our identified high volume nodes. This is where we saw in the last video the high volume node collapses, breaks down, and it's no longer really adhered to. It's tested slightly as resistance here. Price is slicing through, and that tells me, you know, it's time to remove this as any sort of valid signal. We'll get rid and see what's next. See what next price. This is our next area of interest. Price almost hits it but doesn't. We wouldn't have taken that trade because the other high volume node was still in place, and we just keep following it as price prints. Let's get rid of this box now. And we have another swing failure pattern here. Now we've got larger targets to go for overall. Once that swing failure's happened, we can put the stop loss below there again, set our take profit up here again, another trade 2.22, and finally we get the big breakout, and we'll discuss breakout trading another time. But as I've said, you get after the fourth test of resistance, 1, 2, 3, 4, probability, the node keeps getting weaker each time, the probability of breaking out increases, and eventually you can play these for the bigger wins rather than the range trading wins. We can see price comes back again, tested this area, continues upwards. So that's the kind of general idea, and as we go through more educational videos and get to specific trading strategies with risk management explained, then the whole picture will come together and you'll be able to form your own trading strategy that meets your risk appetite, because everyone's risk appetite is different. And this is just a great starting place to learn the high volume nodes, a great place to start even, because it gives you key areas to look for, key areas to measure your risk management, key areas to place your stop losses, place your take profits. And on the larger time frames, high probability, and lets you build the confidence you need to trade and then potentially move on to smaller time frames if you wanted to do that kind of thing. So the final video, we will be briefly looking at the high volume node psychology on the larger time frames, other things to look out for. So don't forget to ask any questions in the comments and subscribe for the next video. Thank you.